Okay, my microphone was plugged in. Sometimes I can be a bit clumsy. Yeah, I was saying, well, I said good morning. First live stream back since the silver bullet mentorship. I'm back to using the classic ICT green colors because the Valric ones, the luminescent red and black candles, it's just a bit too confusing for newer viewers. Like, they get confused when they see up close candles that are red instead of maybe green. So, back to green. I have to say, I do prefer these. I'm not gonna lie. Can I just get a quick audio check? Because I don't want to be talking to myself again for the next 2 hours. We were doing a live stream in the roundtable the other day, and I was mute. Well, no, I wasn't muted, but the live stream ended after about 30 minutes. I don't know why, because I was talking for 2 hours, and it just ended the stream. Weird, but whatever. Okay, good. I think there may be a little bit of latency today. Yeah, I forgot to put it on ultra low latency. That's my fault. Tomorrow it'll be on ultra low latency. We'll do analysis in a moment. There may be live trades taken. Maybe. If I see good setups, I may take them. They will not be done on a live account. They are going to be done on a demo account for legal protection stuff. This is a fresh demo account. It's completely reset, as you can see. There's no history, there's no P&L, there's no nothing, so it's a fresh demo. Yeah, nothing special. But you need to read the risk disclaimer if you're going to be watching the stream. I have to sell this stuff for legal protection, so yeah. The risk disclaimer right at the beginning of the stream, you got to read that. And if I do take any live trades, they are on a demo account. It's simulated money. It's not real money. I have nothing on the line if I do take a live trade. If I take one on my phone whilst this is going on my actual account, I may share that. But if I don't mention it, just assume that everything's done on the demo. I've already had my trades this morning on the pre-market model. And yeah, let's go through the charts. So daily bias, we've still got last week's new week opening gap. We've got this week's new week opening gap. Friday was an inside day relative to Thursday. This is last week. So Thursday's low, Thursday's high. Friday did not breach either of those two levels. Today, so far, we have not breached the Friday high or the Friday low. So I'm looking for a good, really good price action today. I'd expect us to have some nice volatility, especially with PMI on the verge at 10 o'clock. The market opens about to begin. So I think we can trade as high as this Thursday, 30th of October daily high. But a low-hanging fruit objective would be that 31st October level. If you're wondering what these quadrants are, they're just the quadrants of that weekly premium wick. It's going to be very useful for determining where we can see areas of support and good PD arrays, like right here. And I'm going to remove... No, we'll keep that on for now. Okay, I'm going to put the opening range gap on. I'm not going to be hugely focused on commentary or teaching, but I will, be narrating the chart and my trade ideas, if there are any. So this is our opening range gap. Quick mention of the gap size. 250 handles. So it does not need to fill in consequent encroachment today. A lot of people have this misconception that every single day it's going to have a 70% chance of going all the way into the consequent encroachment of the opening range gap. It doesn't need to do that. All it needs to do is trade into, on a 250 handle new day opening range gap, it doesn't need to trade into it at all. it can run into the upper quadrant and go, it can touch it and go, it can completely ignore it, it can completely fill it. So you really want to focus on the narrative that you already have and then apply opening range gap logic to that. So today we have a 250 handle new day opening gap. I don't need the consequent encroachment, the lower quadrant. I don't need any of that. The only level I would look at is the 29 or is the upper quadrant. And the upper quadrant happens to align with the 29th October's new day opening gap level. So I'm not even going to place that on my chart. And I will fade this. How much do I have to pay for Discord? I don't really want to promote it here, but in the free Discord, if you go into the roundtable section, all the details are there, or you can go to wop.com/Velric. That'll work. Yeah, there's going to be a bit of a delay today. I think it might be like 20 seconds, which is just, well, it's my fault. I was meant to switch it to ultra low latency, but I just forgot to do that. So tomorrow it'll be ultra low latency. That's my fault. Okay, we had pre-market model trades this morning. 7:15, we had this turning point at that 29th October new day opening gap. I do use old new day opening gaps as well. That was like 4 or 5 days ago. But I'll still consider new day opening gaps that are relatively close to market price. And as you can see, this one was right here. We have a lot of respect for it. It takes out the liquidity engineered inside that new day opening gap. And then we have the relatively good lows of 7 a.m.'s opening range, which was just a really clear draw. I got stopped out around here, and then I re-entered. And well, I entered first on this order block, got stopped out on my trailing stop loss, a little bit too tight. It was still in profit though, and then I re-entered, got that low. Extend that suspension block out, and we have, because this is a mini market maker model. If you extend PD arrays out from the left hand side of a market maker model, you're going to see them used on the right hand side of the chart. So you always want to do that. Friday's high is what I'm mainly looking at. I'm looking at buy side objectives here, because if I go to a 5-minute chart and I put on the kill zones, this is a classic buy day. We had a tight Asian range, it drops below Asia's low, goes into an area of support, being the new week opening gap, plus an inversion gap, and then we get a rally higher after it gives us VIP discount pricing below midnight opening price. Rallies higher throughout the rest of London. London lunch keeps expanding in the direction of our bias. Pre-market range, a little retracement, and then we get this random pop-up higher from that NVIDIA earnings report. I believe someone mentioned that in Discord. I think it was Ivan. Thank you, Ivan. And now I'm looking for the Friday high to be taken. That's this high here. This is a fair value gap you want to have your eye on. This 5-minute fair value gap. And I want to look at this level. It's a breaker block that's also overlaying the 29th October's new day opening gap high. So that would be more significant than it normally would be. Take this off. Let's check if I did that correctly. So the 29th October's new day opening gap low is the exact same level as the upper quadrant of today's opening range gap. So if we get a run into there, even if we dip below it, I'd like to see some kind of supporting PD array or some kind of support seen directly at this level. But it's okay if we trade below it with displacement and then trade back above it using the fair value gap that forms as we displace through it to the downside. That'd be a good area of support if we can get back into there. So that's a potential scenario to have your eyes on. When I'm trading the morning session, I'm never really operating concretely. This is what has to happen. I have multiple scenarios in my head, and I'll say, if this happens, I'll do this, and if that happens, I'll do this. And if I'm bullish, these are the following things that can happen. This is what should not happen, etc. That's what I do every single New York AM session, and really I do that in the majority of my trading anyways. This is our first presented fair value gap. Looks like it's going to be a breakaway gap for now. Can be returned to later on. And this entire area is pretty much a bounce price range. We took out this external high. And we'll probably get Judah swing lower as far down as these relative equal lows here, maybe even the pre-market low. And then still will set up to the highs inside the macro, potentially. So that's total soup. And this entire thing is a bounce price range. It's weak because it broke away from the first presented fair value gap, so that's a sign that it's going to keep trading lower into some kind of sell side objective or an efficiency. And overall, my target for the AM kill zone, AM session, whatever, is going to be the Friday high, and then it'll be the all-time highs. So if I'm bullish, I'm not bothered when it's trading against me. This is all a suspect drop lower. I'm okay with it doing this because I wouldn't buy up here anyways. We're too close to my objective. I want to see it run into some kind of sell side or some kind of inefficiency where it gets a level of support, and then I would want to look for potential buy setups. Maybe we can get something inside the macro today, but be aware that we do have 10 a.m. PMI. It's okay to trade a little bit ahead of PMI. You just do not want to be in any positions when that 10 a.m. news comes out, because sometimes it can take face off. But then it can also be very underwhelming and not do anything, and you'll think, oh, I shouldn't have done that, I should just let the position run. But really, the smart thing to do is let the position go. This is also a pre-market high, I just realized. I said this ad nauseum in the silver bullet mentorship. When we take out the pre-market high between 929, 930 and 931, we have a good chance of going into the opposite end of the pre-market range. But I'm okay if it doesn't do that. I just want to see it find area of support anywhere around here. Maybe take out the pre-market low, find it in these inefficient candles, fair value gaps. This here's a really good area of support. I can absolutely see this being used. That, especially with the order block right next to it. So, market maker model, that'll be a low risk buy, which is our classic buy day. And if we get a drop down below this pre-market low into one of these inefficiencies here, maybe even the order block, I wouldn't really want it to go into that fair value gap because it's a little bit below the impulse price swing here, and the parent price swing, it's just a little bit too deep for me. I want to see it find support around optimal trade entry levels, so that would be 62% retracement around this area. So this would be a really strong area of support if we drop into there, and then that would give me the confidence, potentially, depending on how it reacts once it gets there, to trade into the Friday's highs. But we'll just have to see, because it may even, find something to get support in here. But I don't really trust any rallies higher right now, just because of how strong this draw is to the downside. Okay, bearish order block formation. Take a quick peek at the dollar. Real nice, real nice. So we have really in sync markets because ES, YM, and NQ are all doing pretty much the exact same thing, which is good. That's what you want to see. Plus, the dollar is rallying against the direction here, but I can see this consolidating for a while, which would free us up to move higher on the Nasdaq and the rest of the assets. We've got a bit of a divergence, but just because of the strength of this draw, I think we'll still probably. Actually, no, I can't say that. Yeah, it's just a wait and see scenario. My trade's going to be to the buy side anyways, so I'm not fussed. Optimal trade entry, auto block, the value gap. But the draw is otherwise. Nasdaq is strong, YM is weak, ES is in the middle. It's still more of a wait and see scenario for me because I wouldn't trust this little rally here when we have such a strong draw to the downside, and when we look at intermarket relationships, or just the correlated assets with the Nasdaq, we can see that they have a real willingness to go lower. So Nasdaq may follow suit. This will, well, I don't consider this a high probability buy. Even if we get a market structure shift, it's just against what the other two assets are doing right now, and it doesn't fill me with a lot of confidence to enter buys. Some people can be like, oh, but the bodies, the bodies. The bodies don't influence the entire price action. You have to look at the overall narrative and what the other correlated assets are doing as well. Those shorts matched my model perfectly, but want them pre-market lows taken. Yeah, I want the pre-market lows taken as well. Nice to see you, Brad. That could be area of support for later. Or this. It's still retaining that bearish order blocks. While the bearish order block is still retaining control in this case. And that's pointed out because of the mean threshold level. It's just holding very firmly. So I think this is a suspect short-term little rally. A lot of people may have taken a long here. Even if it does play out, it's not high probability. Good to see you thought I'd tune in for a bit. Yeah, nice. Always nice to have the community around. I like the consequent encroachment of the regular trading hours gap matches up with a 4-hour CIBI. Let's check it out. CIBI. Busy. Yeah. Yeah. Which one? This one? Yeah, this one. Yeah, very close. I don't know if that's the one that you meant. You see that? It's almost like I know how to trade. Almost like I said, that's probably not a good idea to buy there. Hmm. 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 Random levels. Random new day opening gap levels. I consider this unfinished business. I think we'll still continue rallying a little bit lower into an area of support, but ultimately I'm looking for a turning point somewhere. I'm not going to be taking anything prior to news, just because, you don't want to be in with news. But I consider this unfinished business, and the reason for that, even though it's multiple wicks, I'll leave this on, but I'll do this. No, I won't. I'll take that off. We have this high here. It's made relatively equal with this candle, and then it's run up above with the following one with a wick. Then it pokes through again with a wick, so that's like a double sweep, right? If you enter turtle sweep here, you wait for it to reject, and then you put your stop up there, you would have got swept out again. That's kind of like a double sweep, a 3 drives, whatever you want to call it. But because there's no bodies up here, it's just wick, wick, wick. It means that we didn't trade up here for very long, which in that moment of time, it means it's reactive, and that's probably a good sell. Well, that's a bit of an oversimplification, but generally means that you're going to have some kind of rejection. But it also means that there's still some built-up liquidity there. It hasn't all been absorbed. So it's unfinished business, meaning that this is still like a valid high to be run out again. So you can extend this one out, the original one, or you can look at the most recent one if it's going to be real strong. Either's fine. I'll just look at this for now. Okay, it's staying above that pre-market low. It just took it out with one little wick. Let's take a look here. I think we'll wait for this 5-minute candle to close before considering anything. So there'll be 2 more candlesticks. This looks like a potential inversion fair value gap. To be honest, I would have liked to see it run a little bit lower, and oh, we did clear out these lows. Okay. So it's got the order blocks there. Decent area of support. I would have preferred, though, it went into these inefficiencies. So this isn't my A+ setup if it does end up being buy. Yeah, I would have much preferred it went into these inefficiencies. That would have been the best situation for me. See how this closes, because if it closes and not inside that gap, it's kind of weak. Yeah, it's kind of weak. So I'm not looking at this for an inversion gap yet. Probably be a SIBI for the time being. So I'll change that. Or not. We'll see. I would rather it runs a little bit lower than find support here into these candlesticks there. We'll see what the news brings. Yeah, the news is just gonna do everything. Really, I could just completely sit out, not even bother trying to tape read it until 10 a.m. I'm more just doing this for the stream. Yeah, nice. Wicks all the way through. Leaves a elongated wick. That's like a scared money stop out thing. The body gets pulled all the way back down. Below the PDRA is like, that's good for weakness. If it was in, then that's still weak, but this is even weaker because the body doesn't have the willingness to stay inside that PDRA. Didn't ES go down there? It did, yeah, but it doesn't mean the Nasdaq can't. It can still go down there. I mean, ES went a lot deeper than Nasdaq did. Hourly fair value gap as support. Oh yeah, we mentioned this in the morning. Before this one even formed. I'm not looking at this one for the time being. Not yet. I will when I start seeing bullish reaction of the 1 minute. Okay, that's our regular trading hours. Consequent encroachment aligned with these lows and the inefficiencies here as well. So that's probably a bit of a draw. Again, though, we have 10 a.m. news. You'd rather sit on your hands for now. You don't want your face to get blown up with, you know, a news event. Hey, everyone in Discord got those cells. Nice. Nice, nice, nice. Couple people got a short buy. Oh, that's on gold. Okay, that makes sense. Great stuff. Let's check out gold. Relatively equal highs. Let's swap those. Nearly. But you have to account for the difference between the CFD and the future sometimes, so yeah, that's fine. That would still be the draw. Even maybe these highs. That's a really clean market maker buy model. Gold's been something I've stayed away from for a while just because, actually, October the 17th, this Friday, I said, don't buy gold. And then it just drops. Let me go back to the layout. Yeah, gold's been something I want to stay away from for a little bit because when I saw that it's probably going to start making weirder highs and start dropping a little bit, in an all-time high environment, I don't want to be selling, or I want to be buying. But then we're also in a weird condition with the world at the moment. But it seems to have found a nice area of support, and we have this inefficiency above us. It's too soon to say if it's going to be bullish or bearish. I'm not here to give you that advice. I'm not here to say or predict anything. That's for mentorship. But no, but nothing. Nothing. Back here. Okay, ES has taken out the lower low, as Lumber has just mentioned. So that's a cue for buy signals. And YM hasn't done that yet. So this may, well, we'll just see what this does. I'm not going to predict YM. I don't even care about YM that much for SMT. NQ hasn't gone all the way down to this low to take it. They are really clean, I'm not going to lie, and they're inside the new week opening gap. But I think with the areas of support and with the divergence between ES right now, it could just potentially find an area of support down around this area, and that would be potential long setup. Okay, news candle. 15-minute BISI is where I'll take a stab at longs. This one, potentially. I want to let this news candle and a couple more candles play out first before we start looking at that. This is good though. I like that. I really like that. Yeah, Brad's draw to the regular trading hours, consequent encroachment smashed. Nice one, Brad. We should get to at least the 4-hour order block and the 15-minute fair value gap after midnight open. Let's take a look. 4-hour order block. That one. Yeah, I agree. Well, I was framing it this morning on the hourly chart instead, so I was looking at this. Just because it's a bit closer to mitigation, plus it's got the fair value gap next to it. Yeah. Okay, I want to see it start turning around. I would like it to be these inefficiencies. If it wants to go a bit deeper, that's okay. But I'd need to see a lot of strength coming off this fair value gap. So if it does want to trade down to this gap from the hourly chart, I would want to see it have a really strong reaction, something undeniable. Just because of how clean these lows are, I don't want to be caught offside because I was, prematurely looking to enter a trade on the fair value gap. 15-minute fair value gap after midnight. Yeah, these. If you're wondering why I have this still marked out, it's because it was the major movement in the 7 a.m. opening range. We had a really nice suspension block form, and it was really reactive. That's the only reason I have it marked out. And as you can see, it was utilized for that fake rally higher and that lower movement as well. Let's close this up now. Okay, we have this data low here. So potential little double sweep, maybe. Not something I'm gonna count on, but we might just drop back into this low, sweep it one last time, fall into that hourly order block, and this, and get something. I would like that. Here we have super clean targets up, on the buy side. Relatively equal highs are golden right now. Perfectly engineered. Still looking for the Friday highs. That. I mean, my main low-hanging fruit would be this, but if I can somehow get buys down here and I can get all the way up there, I would absolutely leave a little bit on. Okay, potential bearish order block formation. I think we'll probably trade below this low, and then we'll end up using that as a bullish market structure shift if we do take out this low. If we don't, then I'm not considering it. But it's not the strongest MSS just because we'll need to see how it trades through it, but I would want to see it trade above this gap particularly. And once that becomes an inversion, it's supported with the 30-odd October's new day opening gap low and the fair value gap post consolidation. It'll be a stronger point of rally than just this market structure shift where you can easily get a little bit faked out because it can take that and keep going lower. All stuff taught in the Silver Bullet Mentorship, which is free on this YouTube channel. Yeah, there's that data low taken, so want to see it find support in something here. This or the hourly gap. Got a feeling we'll take a level low on NQ or just miss it. I don't know. Maybe. I think if this bearish fair value gap, these two up close candle fair value gap. If this bearish order block, these two up close candles, act as a point of rejection, then I would probably just throw longs out of the window and say, whoops, I'm not going to trade the rest of the morning session until I have a new trade idea. Because if it's bullish now, I don't think it should go too much further than here, to be honest. Maybe drop into this hourly order block. Yeah, I want strong displacement somewhere around here now. If it doesn't, then I would just throw that out the window and be content with not doing anything for the morning. Didn't I just say that it would go below this low? Maybe, just maybe, I can read price action. I have to flex. Okay, YM got these relatively equal lows, so has ES. I mean, not the extreme ones, but the relative to where it's trading, these are the relevant ones. I don't think... Okay, it has taken out that low. That's good. Nearly. No, it made them equal. I'd want this to take out the low first before I consider longs on NASDAQ, because then ES would be free to move higher off the mitigation block and the fair value gaps here, which is a high probability area of support if we do take out that sell side liquidity pool, being this blue line. Now, that would be the preferred scenario. So I'm not taking anything on the NASDAQ until ES gives us that, and that may be contradictory because, oh, what about SMT? Market structure comes before SMT. To all the SMT lovers. SMT is good, but market structure comes first, and then you can confirm it with SMT. It's not confirmed until, for me personally, I want to see this bearish order block on ES give us a rejection to take out this low, which is a relatively equal low. We'll see if that happens now. But then that in this area of support would be where I can trust buying on NASDAQ. Until then, though, I'm just not so confident in it. You gotta demand probability sometimes. Just a few points above midnight. Oh yeah, I have midnight on my paper and I just don't use it that much. It's this one here. Yeah. Where's it gone? Here it is. Okay, we'll see if this cap delivers. It's a nice size. I would have really wanted ES to take out a low. I might miss this if it does trade higher, because I don't want to be a part of it if ES doesn't take out that low. Because I want to see this as a Tudor swing. That fakes going higher, takes out the low, and then it's a really strong area of support. This here, it was a little bit subpar for me. So once it takes out that low, then I would want to see it trade through and then go higher. So I don't trust this right now. Even if it goes higher, my trade plan and the way I ensure higher probability scenarios is by being very picky and selective. That's just how I roll. That's how I roll. So again, technically a market structure shift, but not my preferred setup. I wouldn't take that on any account. Even if the gap is left open and we trade higher, normally I would say, oh, that's strength, right? I always say strength, 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 weakness, strength, weakness. In this case, market structure still triumphs that or trumps that, and I would not look at seeing buying strength just because we left a breakaway gap. Because of ES not taking out the low, which I really, 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 really wanted it to take out, whereas YM did. I don't know. We'll have to wait and see. It can go higher from here, I'm not denying that, but it's just a position that I wouldn't feel comfortable being in, so I'm not going to do it. That simple. Here's a balanced price range. Oops. Little one there. Heavy is a market structure shift, a candle closure, or just a wick. It's just a wick. It doesn't need to be a candle closure. A change in state of delivery is a candle closure. A market structure shift is just a wick. But you'd want to see displacement through a market structure shift. Those are going to be the strongest ones. And you can refer to the market structure shift protocol video in the silver bullet mentorship. Okay, I may just miss this move then. Let's see how this fair value gap performs on YM. Because I just want to see if it has the strength or weakness that ES and Nasdaq, ES and Nasdaq have. I still don't trust this, by the way. Maybe IOFED. Potentially, but like I said, not something I'm going to participate in just because I feel like I'm repeating myself. Just because we didn't get the sweep that I wanted on the ES. So, better I wait. Well, that's good. Not IOFED. 950 candle is a 5-minute suspension block on MNQ. Let's check it out. $9.50. Yeah, it is. I don't really like when we have a wiki delivery like this, even if there's volume bounces. I still look at the PD rate, the fair value gaps here, but I just take them with a little bit of a grain of salt because it's still back and forth delivery. Whereas I know there's volume bounces and we have to incorporate those, but I much rather it be clean displacement to the downside. I think that just embodies the function of suspension block a lot more. Suspension block with 2 volume bounces. Although this hasn't been taught by ICT yet, my I don't want to say hypothesis, but the way I view it is volume bounce is indicative of displacement to the upside. Then you have that displacement to the upside, then you get another volume bounce, and that creates a suspension block, which signals that it's going to be one-sided delivery, and if you can get back into that suspension block, because it's an inefficiency, it's just going to really run that way. But because it's a little bit back and forth, even though there's volume bounces, I just take it with a grain of salt. That's it. Okay, that's... Told you. Sorry. My ego gets the better of me. I'm still looking at that, by the way. There we go. That's what I wanted. Thank you, yes. And now, let's look at these PD arrays a little bit more cleanly. Don't get me wrong, we can still run into these lows on a NASDAQ. That's still absolutely possible. But I would like to see some kind of reversal, because if I want to participate in this market, then I have to, well, I'm looking at long setups, I'm not looking at sells. So in order to do that, I need to see a reversal, and the way I'm framing that here is it's taken out the relatively equal lows, and it's gone into areas of support. So we have this bullish order block, and then we have this valid gap next to the bullish order block, which if you've gone through the silver bullet mentorship, you'll know it makes that higher probability. So let's take a look at this on the 1 minute. I'm going to give it a bit of a waiting period. I'm not going to just, be hasty. Oh, it gave me what I wanted, I'm going to buy it. No, I need to be patient, exercise discipline, and wait a little bit. Give myself a bit of a waiting period to confirm if it's really going to be wanting to trade higher, or if it's going to still use this as a bearish array and go into the NWOGs relatively equal lows, because these are really clean. Potential swing point forming. Maybe. I'm going to grade this candle. Make it a little bit thinner. No, I'll keep it big. It's going to be bearish. You want to see it close in the lower portion, the lower half, and even better if it's the lower quadrant. The wick can drift a little bit higher than you want it to. Okay, never mind. It's not a swing point. This is still a swing point, and this is the wick that we're grading. Oops. Okay, the dollar looks like it wants to sweep these consolidation lows, which does promote higher prices on a NASDAQ, and that's good. Maybe go into this gap, or even these lows, which would be still fine if it's going to trade into these relatively equal highs. Okay, consequent encroachment respected perfectly. That is our swing high, and then, well, it's an intermediate time high, and it's displaced lower. I would have rather it given us a long setup, but that's okay. Maybe we will just go into this and walk relatively close. That is possible. I did tell you though, today's price action will be nice. Not bragging. Just because of seeing the inside day on Friday, and we have missed the Friday high, so I don't know if we'll leave that for tomorrow or if we'll get there in the PM or in the later half of the AM. We'll see. Okay, we have got the lower quadrant of that weekly, our weekly premium wick. So maybe we'll see support off there. I don't know. Wait and see type of scenario. You'll hear me say that a lot. Wait and see. Wait and see. It's because you don't need to predict it. Like, I predicted all this down, pretty much. But I don't need to do that. I can just wait for the perfect long setup and take that. I don't need to predict all this going lower. I don't need to do any of that. And the reason I'm looking mainly for long setups is because we're very close to all-time highs. I came in today with a bullish bias. And you know, if you're bullish, then you look for longs. Okay, really horrid premium wick if we're going to be bullish. I don't like that. We've got the gap, we've got this. It's very unlikely that you see a candle create such an elongated wick and then you completely overlap it all. So I have to lower my expectations of Friday's high and look at this wick level and say, okay, what can I sell for going in here? The lower quadrant, potentially. So I'll look at the lower quadrant here, and that would be a point where I could see it go to. Maybe in the launch macro, which is from 1050 to 1110, it retraces into these relatively good highs. Just short the suspension block, that'll be alright. I don't know, I'm kind of benched on the sidelines here, just because of that 4-hour candle and, yeah, no perfect setups right now. So 1 minute busy inversion overlapping reclaimed the 1 minute busy inversion overlapping reclaimed 1 minute Sibi. I've completely lost you there, mate. Sorry. 1 minute busy. Maybe this inversion overlapping the 1 minute reclaimed Sibi. This one. Oh, yeah, this bit. Yeah. Yeah, I got you. My fault. My brain can't process more than 6 words at a time. I can only process PD arrays. Okay, the hourly gap is in play. It's deeper than I wanted it to go. If it was going to be bullish, I would have rather it didn't trade this far down. So my long setups are out of the window. Not looking for those anymore. The new week opening gaps are relatively good lows. Those are probably the next. Well, I'm not going to give a draw just because all-time highs and all. I don't sell on all-time highs ever. If I'm taking the pre-market model or if I'm taking very small scalps, then I can. But in the session that is contributing to the majority of the daily range, I'm never going to go against my bias, typically. Even though I realize that my bias is wrong, I'm okay to just sit out and say, oh, that's fine. So yeah, no trades today. London low on the way. Yeah, that's London low, isn't it? Yeah, that's London low. Let's look at ES. Right through these, so no. 1 minute, guys. Back. Okay. Super large displacement. Yeah. Why do I put these rules on myself where I say I can't sell on all-time highs? It's because the majority of the time, or like, even if it's 6 out of 10 times, even if it's 5 out of 10 times, or 3 out of 10 times, if you're going to get burned, I mean, like, unnecessarily take losses, where that can be avoided, then why would you want to not follow those rules? So even though today it played out, the majority of the time selling in a market near all-time highs, near all-time highs is not going to play out. So yeah, that's why I don't do it. I think Brad agrees with me on that one. Very interesting market today. Very interesting market today. Yes. Okay, run through midnight. I'm not really focused on midnight right now at all. Also, I don't usually use midnight as a support and resistance level. Sometimes people say it's reacting off midnight, and I'll say, fine. But I'm not looking for the midnight price to act as support or resistance. I'm looking for the discount sensitivity. So when we dip below it, if I'm looking at midnight for a potential long setup, maybe I want to see it be reactive below it. I don't really care if it's giving us candle closures or opens at that level. That's not where I'm focused. I'm focused on it giving us, a very reactive, fast reaction on it being below midnight, because it's like the daily ranges discount tool. If you just look at midnight on a classic day, midnight's your friend. And a market that's going to be bullish, a market that's bullish will not sustain discount pricing for very long. That's why I don't use it for support and resistance. I use it for reactivity and strength and weakness. It's okay, probability is just low probability short time. Exactly. Yeah. 100%. You can't survive in trading long term if you try to win every day, every trade. You have to accept that you want to align not every factor, because then you'll never get a trade, but the majority of factors on your side. And to do that, you have to put certain rules in place that are not easy to follow sometimes. But that's the game. I mean, you just saw me call, not to brag, a lot of these candles, and I was looking for long setups. And if you were looking for longs, and you saw this, a lot of people that I know, a lot of students of mine even, would have probably bought that. But then we said that we don't want to see that happen. It's just demanding more and making sure that you have, the the majority of probabilities aligned with your trade ideas. And being at all-time highs and selling, it can play out sometimes. I'm not denying that. I'm just saying that it's lower probability. I don't want to be in a low probability trade. I want to be, putting my money on something good. This is demo, by the way. I feel like there would have been a lot of people thinking, oh, the Friday high got Judas slimed. Well, sorry, it was a front run by a couple of handles. It will just want to go straight back into there. So they may have just bought on every single bullish PDRA, which is, that's a mistake. You don't want to be doing that. The shorts matched my model perfectly, but yeah, I don't like shorting this close to all-time highs. I'm happy to watch this run, lower the game. To watch this run, lower the game's game. Yeah. 100%. 100%. It's hard to follow rules. It's not that easy, but the more you do it, the more discipline you forge, the easier it gets. Emotionless trading is profitable trading. Oh. Dollar completely overlapped all this stuff. Not complaining because I am bullish on the dollar. As you can see, I've been plotting this to go higher since like the 23rd of September. It's played out really well. It has swept this low by one tick. Yeah, literally one tick. You want to wait and see if it displaces through it. If it displaces through it, it may be an indication that it might continue to the new week opening gap low and potentially go for maybe these. Maybe. London highs or lows are taken 70% of the time. Ran on the last 10 years of NQ data or trend study. Yeah, I know. No, I don't remember what time. I did teach that in my private mentorship. It's necessary information if you're going to trade the classic buy or sell day model. Quick study. They're taking a lot. Oops. Okay, I think may wait for the retracement macro, that 1050 to 1110 retracement macro, and then we'll look for a trade then. But I may have to go a little bit earlier. Amazing trades I'm seeing in Discord. Amazing stuff. Well done, everyone. Nice. Okay, I'm not gonna bother trying to predict the rest, but for bullish scenarios to play out, I'd want to see it displace above here, and I can see it retracing as far as this suspension block, these relative equal highs mainly. Beyond that, I wouldn't have a concrete expectation. If you're trading the lunge macro, settle for this fair value gap to relative equal highs, and then you can leave a runner for these relative equal highs, and then you can leave a runner for the rest. But I am gonna be up now. I'm gonna go get some food. Gonna, do the rest of my day, and I'll see you later in Discord. If in about an hour I'll be in Discord. Hopefully someone's come away with some good information from the stream.